All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for November 19th, 2021. Pretty good day at work. We're going to see some trades from the boys today. They pulled over 40R out of the market, doing what we do. So that's a pretty good day at work. Let's get started with the usual market health check, trade reviews, and then we'll get into the weekend reports. Tomorrow, the foundation's Q&A is going to go at 8 o'clock instead of 6 o'clock. We have a soccer match to attend in the afternoon, and so the foundations will go a little bit later. The coaching and mentoring group will happen at the normal 8:30 Central Time in the morning, and then we'll do swing trade chart reviews at 8:30, so immediately following the foundations course. I posted a link on Patreon and on the tortoisecapital.net homepage for $1,000 coupon for the foundations course. That coupon's going to be valid until the end of the year. On 1 January, the price on foundations is going to go up to $2,000. It'll never go lower than that. And I will tell you, the 40R that the boys pulled out of the market today comes from training they got in the foundations course. That may be all you need. So I ought to be selling it for $5. I'm stupid. I mean, if you're trading $100 of risk per trade and you pull 40R out, that pays for the foundations course 4 times over on one day. Ridiculous. All right. So here's how I'm reading the health check today. So 27 days ago, we had the owl entry, which was the result of a big sell-off, a bottoming out of the market. This orange bar was the turning of the dragon. So there was actually a supported spring crossing earlier, then the dragon turned, and then the RL30 turned here, and then that breakout triggers an owl entry. You put your stop right at the base of the dragon. So your risk is $6 from 440. And today, you should have your stop. You should still be in this trade, and your stop ought to be at 467. So that's $27 on a $6 risk. That's 4.5 R on a swing trade. Just using daily charts and using the relaxed owl entry and a simple risk. And you could use the PSAR. You might have used the southern skin of the dragon as your trailing stop and still be in the trade. And if this keeps going, then we keep moving our stop up. So that's what swing trading with these fractal patterns looks like. I would observe that the move up from the owl had one strong leg and then a 3 or 4 day consolidation. Then the second leg up had a sell-off to the bottom of the dragon, and then a 1, 2, 3 recovery would re-enter right here. And then the last 4 days has kind of been consolidating here at this all-time high. Today it pushed to a new all-time high, and then backed off to hold just above the edge of the dragon, which is pretty good. So my stop would be, I'm going to give back that much, which is less than 1%, which is right around an ATR. If we look at this a little more closely, just on the 10-day, you can see that the 10-day range is about 1.9%. Here's where it pushed to the all-time new high today. Here was the previous peak statistically of the peak of the RL10. You notice that it's tested one time and now two times, and it was not able to hold that and closed lower than it opened as it went into the close. Now it's still above. It's still holding above the upper skin of the dragon, the spine of the dragon, and the lower skin of the dragon. It's well above the PSAR. The PSAR on Monday is going to be basically at 466.50, which is like it's also the 2-bar low. So I can't justify a stop any lower than that. Why would you give back that much or more than, why would you give back more than that? Is what I guess I'm saying. I wouldn't give back more than that. I could also justify like the spine of the dragon here at 467.50. This purple line is the long-term fair value, which is at 467.75. So that's sort of an argument for why you want that. The baby dragon is this one here at 468.25. The 1-bar low and the edge of the river is here at 468.50, which I think is you could make a pretty strong argument for that one too. So I think any one of those 5 lines is reasonable. Take your pick. I could live with the spine of the dragon. Maybe I might just take the middle one at the fair value. If you sell at fair value, is that okay? Yeah, I think it is. And then meanwhile, the PSAR gives you that time stop. Stop it. You could look at it this way too. Like if you just wanted to stay in this trade longer and give it, that time series stop. This slope of the PSAR seems like a reasonable proposition as well. You're essentially giving it this much room on Monday. On Monday, the price would be here. You're giving it. This is where your stop would be on Monday, and then on Tuesday it would look like this. All other things being equal, right? And then Wednesday it would probably be. Let's see here. So the PSAR gives you that kind of stair step, that little stair step function. So yeah, let me know in chat if that was useful. Let's take a look at the sectors. So we have the S&P was down a fraction today at minus 0.18%. So it gave back a little bit. You had emerging markets were fractionally better at minus 0.16. The Qs were strong at 0.56, and then treasuries now at 148.36, up a good 1%. So there was some defensive posturing today, I would say. You see the EEM is an offload to the non-US, reinforcing the strongest sector, which is tech, and then the defensive play in treasuries. So if there was profit take in the S&P, that's where it went to. And then there were give backs. There was no strong follow through in the Russell or in diamonds, which were both down about 0.9 and 0.96. All right, let's look at the sectors that outperforms. So we have Brazil, agriculture, consumer discretionary, not surprising. We have tech in the fangs up 0.7 and 0.86. Lithium, VXX is the portfolio insurance, the volatility ETF. Bitcoin Trust, clean energy up 1.85, blockchain 2.65, Ethereum and the large cap blended blended crypto there. There's another crypto. That's the Bitcoin Trust. The blockchain trust is really a crypto. It's a company. It's not crypto directly, but it's companies that should benefit from blockchain technology. So you see it pretty strongly correlated. All right. The companies that did well today, individual targets then. Tesla up 3.7 to 1137. So it held support down there at 1,000 and then has come roaring back. Coinbase 2.8, Cliff 2.2, Apple 1.7, US Steel 1%. So the the steel companies that were on a 3-day sell-off did well. We called that yesterday. Said be prepared for that, and then we're going to watch Jamie and Luke pull 40R out of Cliff today. So this modest little intraday gain of 2.2% in Cliff, because of the way they framed that trade and that opportunity in a critical state, pulls 40R. So the plan, prepare, execute, and assess. You get sick and tired of me saying that, I bet. That's okay. XLB was down 0.18. That's the materials. We have S&P Biotech down a quarter. The Bitcoin futures 0.27. Wheaton Precious 0.34. Staples 0.36. ARC Innovation 0.5. So that's on a day when the Qs were up a half. ARC Innovation was down a half. Mexico 0.57. Lumber 0.7. The other lumber 0.85. ARC Genomics 0.85. Moonshots, I should say. Down 1%. Finance, Simon Property Group, blended commodities down 1 and to 1.6. Marijuana 1.8. Oil 3.2. Energy, oil exploration down 4 and 5% respectively. And then individual companies that got smashed today. Devon Energy 6.3. Robinhood 5%. PayPal 3.5%. John Deere 3%. Squarespace 2.3%. So, as a trader, it doesn't bother me whatsoever to see my favorite companies get smashed. That just means that they are favorable for the next swing trade or the intraday trade that I want. If it doesn't go down, I can't buy it on sale. And so now I'm noticing Devon Energy down 6.3%. Good. Creates opportunities. It's in the monthly, it's in the summer, and on the daily, it's in the fall. That just means it's been great, has pulled back, and now is postured to make a rebound. So I like that. Doesn't bother me at all. Let's see. Here was my trade in U.S. Steel today. I was ready for the metals, and the boys were on Cliff, and I took U.S. Steel instead. So here was yesterday's sideways closing with a little pinch. The size of that pinch box, let me just draw that for you real quick. From Z3 to Z3 is the size of my wrist box today, 10 cents. It gaps down strongly. Reverses, moves an MMRB, the minimum manageable risk box, off the low. So I treat that just like a frog box. Only let's call it what it is. Minimum manageable risk box. And up it goes. How soon can I get to no lose plus dinner for two? Pretty fast. 1, 2, 3, 4, 5 bars, and then it got above Z1 and then collapsed back down, hits my stop. So that gets about 1.5 to 2 R. Shortly thereafter, it gives me a kata 2, which you will recognize like right here. So you just take the bottom of the RL10, the bottom of the RL10. Now it breaks out of the river and makes a new intraday high. Buy it with the same size wrist box. And there's my stop. It mucks around, then breaks down below the VWAP. So I take about a half an hour loss, maybe an hour loss. It mucks around, makes a series of lows. So there's a RL10 low. There's an RL10 low. Here is an RL10 increase. So that makes this green dot a kata 2. And that's right after a Z3 pinch. And it breaks out above all of this little hump of the RL10. So there's, and it's moved a MMRB off that double bottom. And the other metals are working, so I just buy it with my standard stop. I move it to no lose plus dinner for 2 when I can. After this has started to move up, that's when I move this up to no lose plus dinner for 2 at the PSAR and just leave it underneath the VWAP. And then I notice that it's given me these series of higher lows. Like here was an RL10. There's a higher low. There's a higher low. There's a higher low. Now I take the opportunity to move this stop up one more time and lock in another major piece. And now I'm leaving that in place, and I'm deciding on where I want to put my second entry on this thing now that it's finally moving in my way, because I'm noticing that it's taken out this previous high over here. So if it gets above that line, it's above the Z3 here. It takes out the previous RL10. So I feel like this was going to be an emerging dragon. So I prepare for that second position by raising that stop from here to here and just kind of lock that in. Now I've locked in that gain. And I'm preparing for that second entry. The second entry happens. And then I just take the managerial exit and lock in that win on 2 gains on 2 positions in US Steel, whatever that number is, 24.68. So that's 54 cents on the first one on a 10-cent risk, which is about 5R, and then makes about 27 cents on 10-cent risk. So that's about 2 more R. So that's about 7 or 8 in US Steel in the standard way. Plus I netted 1 out of the first 2 trades. So that's a day at work on US Steel. And then I watched what the boys did and realized I was on the wrong steel company. What are you going to do? Can't get them all. All right, so here's some trades. This is Les. He took his first short today and had some learning curve challenges. He wasn't happy at all with the way he managed his trades, and he got paid 2.1R on trades 2 through 5. So that's getting paid to go to school. So I interpret that as a scholarship day. That's pretty good. Here's a low, here's a higher low. There's your PSAR flip. There's his entry. He decides to get paid 0.7 right away. Nothing wrong with that. He sees the sell-off and then the recovery, and it takes out the previous high. So there's his second entry. Rolls over. He takes that, gets paid 0.4. There's your VWAP. That's probably where we could have gotten short. He waits for confirmation till it leaves the river. I don't know that I would say, oh no, that's Bollinger Band mean right there. Sorry, here's the VWAP. I don't know that that's too late. Crossing the VWAP is kind of that's really the not later than entry, and that's fine. You're cashing that one early, but that really was a function of learning how to manage stops at his broker. And so what turned out to be a 0.8R, if this is 0.8, his normal exit would have been like about here. So that would probably have been plus 3R. And then this would be a 1, 2, 3 entry. He waits for the PSAR flip, which I like. And now he's stair-stepping using the southern skin of the dragon and takes the sniper exit here for 0.2. So if he gets this one, that was probably a 0.5. So I like that. Great learning. I like the way he's been identifying his turning points in the seasons. That's a nice way to do it. Till you get, once you have internalized that flow, it will seem like second nature. The things I want to point out is the importance of winter, right? And it's easier to see on this one. So the winter here lasts all the way here till the spring. So there's your winter move. And now here's the winter. And that move lasts, all the way down into here. So there's another winter move. Do they always? No, this one was so short that's actually a good thing. You have a harsh winter and then a spring and then summer. And then you had a very brief winter, which became spring right away. And guess what that leads to? All the way to the fall. So there's your summer move. There's your winter moves. And there's your tiny little spring. So the 4 seasons of MACD are your friend. Look at this move in the spring and summer. Your best move was in here, and you probably took a 1, 2, 3 exit there. And there's your PSAR flip. Bang. So when that winter doesn't last very long and turns quickly to spring, boy, that's the one you want. And conversely, when the summer and fall don't last very long and goes right into winter, that's the one you want too. Nice work. Jamie, quick scratch. Here's the winter turn to spring. Quick scratch. He gets the PSAR flip again. One position. Now notice the Z3 pinch. When it takes out the Z3 line, second position, that's a Z3 pinch breakout. A third position, because why not? And then a beautiful 1, 2. When this thing is pushing the Z3 lines on that huge excursion on 3 positions, that is a beautiful exit. That's plus 19. Now, here's the one I love. There's the piece, there's the collapsing dragon, or the RLXD, I should say. Here he adds the second position when it crosses the PSAR, or the Bollinger Band mean, I should say. Nice money management exit for 4.5. Scratch, 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 gain, plus 25. Ladies and gentlemen of the jury, this shows why you must respect the PSAR flip, especially if you were feeling so good about this and the PSAR flip happens. Imagine the painfulness of losing that on 3 positions after you had just earned that on 3 positions. Yikes. That'd hurt your feelings. Here's Jamie with ES. So he's using 5-minute contracts here, or 5-minute candles, I should say. And he does about 7R on this one. Nice work. Reasonable breakout PSAR flip and going for it. Rolls over, takes his 0.5R loss, comes down and touches the Z3 right around 10:30. And then this on a 5-minute bar where it has touched Z3 and then reverses, and then you take the second bar tree, that's the equivalent of a 1, 2, 3 entry on 1-minute bars, right? So I want you to notice entry 1, entry 2 on another PSAR flip, and a potential third entry he considered but did not take, and then immediately regretted, right around a little bit after 12. And then a beautiful exit here after a peak run up to 47.14. And then he's going to get the short and covered at the VWAP, missed that one, and then a 1, 2, 3 exit here, or going long, and then cash in. So what I really want you to notice is the 1, 2, 3 entries on the 5-minute bars. When you map that to the 1-minute bars, this is where those occur. I did a little translation for you here. When you convert the 5-minute bars to 1-minute bars, this is essentially where his first entry was, second entry, That's where his third one was considered. Then after it rolled over, that's where he got out. That's where he got short. That's where he covered at the VWAP, which is always going to be the VWAP on any time period, which is one of the beauties of that thing. And then that was the piece he missed. Then he got this one and exited here. So that was his second long side position. But you'll notice that the 5-minute bars give you a pretty nice smooth entry. But it corresponds to kind of typical places we might think of adding positions, except we would have added here instead of here, and we might have added here instead of here. So you can get a little bit more juice out of the 1-minute charts, a little bit earlier entry, but you have to suffer a little bit more of the gyrations. So I just want to show you that, choice of time frame does matter. And there's reasons to go either way. So again, the one, his first, second, and third, he was considering that as a third, and then a beautiful exit, beautiful short, and then a beautiful reentry for about 7. Pretty good work. And now here's Luke bringing in 17. So starts with a typical scratch. He's going for the short side. It doesn't manifest. So he just cashes, tries it on the next, when it rolls over and then breaks below the previous low, he tries another short, makes a micro scratch. That's okay. Doing what you're supposed to do. He tries this one, maybe sticks around too long, takes a micro loss, keeps firing, entry, just like he's supposed to. There's a higher lows. So that's a kata 2. First position, second position, considered the third one. Took his third entry here. Waits for it to break through the dragon after it rolls over. Then takes the same short. First position, second position, third position, scratch. Micro loss, gets paid. Loss, gets paid. Plus 17. Ladies and gentlemen of the jury. Not too shabby, boys. All right, weekend reports. Bullish normal. Overbought on the longer terms, at the high end on the shorter terms. Still cautionary days here in the risk Z. It's saying watch yourself, careful. That's why my stop is so tight, like 1 ATR. ETF got a little bit weaker, down to 70% exposure. Still looking really good on the positions we're owning. Monthly, still strong. I'd have my stop right there, not later than 460. The 9-day, also looking at maybe 465. That's a very positive 4-bar pattern. We really want to see it push through 471. The weekly, the higher lows are encouraging, but there's a lid on it. So we really got to see it get above and go. That's what we want to see. So to me, the stop needs to be not lower than 466. The 3-day, that's encouraging still, but it ended in a doji. That becomes now ready to break out to the upside, or that stop could be at 467 on the downside. We've already seen the daily. All right. The things we're owning in the BMR are here. Still reasonable. There's your ownership there. Energy took it on the nose a little bit. That's what stops are for. Latin America just getting assassinated. And that's Brazil and Latin America. So there's some possibilities there. This is such a great trader, XOP. And then the clean energy also getting smashed. So the whole energy sector is setting up for rebounds. Agriculture making a move. Inflation and higher prices. Inside the Dow, Microsoft and Apple are little two tech darlings. Home Depot crushing it. Discretionary and technology. I take home builders to be an inflationary sign and a store of value. The real estate also working pretty well. All US all the time, especially the growth area. The S&P and tech. So a couple that I want to highlight here, on this ETF2 report. And I want to talk a little bit about the quality. That is the slowest one to change. And we have three measures on this: the strength, consistency, and quality. Each one gets scored on a 1 to 100 basis. And then the mathematical average gives you the average number. So if you were just trying to blend them all equally. So the strength is a 10-week relative strength, essentially, the way we compute it. We have a tortoise way of doing that. A consistency is a 10-week moving average of that 10-week relative strength. So that's the intermediate term. Strength turns fastest, and then consistency is what you want. And then the quality is a 40-week system quality number. So that gives you a risk adjusted, or I should say a volatility adjusted measure. And so it favors gains that come with reduced volatility. So it really favors the kind of grinding bull. So I want you to notice the things that are in the green on strength and consistency and average, but also in quality. So here's the ones that really stand out. So you're getting good gains, but you're also getting value and low volatility. So that's the technology sector. Then you're having this whole cluster here, tech growth, S&P growth, Russell growth, and Vanguard growth. So that's telling you that it's the tech sector. Then the SPY itself. Now, it's not exceptional on strength and consistency, but it is good on average. And then look at the quality score on that, a 99. That's amazing. That's how good the S&P has been. That's guys buying the index and holding it forever. And then Canada, because of inflations and commodities, and down here quietly getting it done, real estate, real estate, and real estate. And that pays a nice dividend too. And that's benefiting from increases in inflation right there. So the quality, don't really emphasize it that much, but probably ought to look at that more. In the green are the good traders under the ATR percentage. These are the top 30 by daily average daily dollar volume. Energy, semis. Brazil is a great trader for a frog. Oil and gas, biotech, and the gold miners. Those are your prime targets. Shifting to the daily. Tons of overreactions and channelings that are ready to work. Home Depot, Microsoft. Apple. The Qs. Consumer discretionary. Remember, XLY does well when, the top 3 holdings in that one are Amazon, Tesla, and Home Depot. Pretty good balance. Tons of auto framers. Lots of good 5DDs that test out well. Plenty to choose from. Same thing in the ETFs. Plenty of auto framers. You'll love that. That is such a target-rich environment. Plenty to study. And there's your auto framer standard frames for everything that is better than 2 to 1. Here's the recommended risk from Mechanical Trading is the my risk. I like that Microsoft is on a daily squeeze, and so is the Russell, ready to pop. And the S&P is near the top of its stack, so it's ready to go. Microsoft, Apple, Home Depot, tech, and consumer discretionary. That's what you need to know. All right, we'll see you tomorrow, ready to review swing trade frames tomorrow. And again, we will do the foundations Q&A at 8 o'clock rather than at 6. And the coaching crew in the morning, as usual, at 8:30. Okay, that's everything I got for you today. Really great work from Jamie, Les, and Luke. You guys are making the argument for me that what we're doing pays off if you just stick to it. Do your due diligence. Keep up the great work, fellas.